Okay, so um, I want to welcome everyone to the first edition of FOREX Clinic. I think you should help us put this one in the chat. Let it be showing us a chat. Now, I'm doing this FOREX Clinic for so many reasons because it's actually free for all. And one of the reasons, please, can we have the chat being displayed, please? And one of the reasons I'm doing this is, number one, to return back. If you have been given something, then you should also find a way to create significance and impact to give back. I believe that the biggest success is not by acquiring things, rather is by giving things, giving back. I believe that success is measured by how much you have given than how much you have received. At the end of the day, no matter how much a man receives, he's going to leave everything behind. Absolutely everything. Every other thing they put with him to accompany him when he is buried is just jamboree. He doesn't leave the grave with the person because the person rots there. So I strongly believe that how much you give is what success is being measured with, not how much you receive. So some people usually call and say, Pastor Sam, Pastor Ewell, help us, assist us, give us something. And you still pay heavily for it. I know that one because I've been privileged not just to be a trader, I've been privileged to work with so many institutions that controls trading. I've worked with a liquidity provider. I've worked with a broker. So at a point, I have access to some inside information about trading. What moves the market, why the market moves, all kinds of information. So I know for sure that many of these academies you attend, they are just collecting your money. All right, they set up a very beautiful office. They show you a lifestyle that is not real. You know, one of the things social media does is that social media can actually reveal fake life and defend it for you. So these guys show you fake life. They show you screenshots of things that are not real. They post behind a car that they don't own or they rent it. All right. Just a joke. We are planning to organize a training somewhere very soon. And I told the person we are planning with it, I said that when we are going for that event, we have to go and rent Escalade or rent Ferrari. We were just joking with it. I said we have to go and rent cars for those 2 days. Rent, because the truth of the matter is that people actually want those things. People measure you based on what they are seeing. Most people, they measure you based on what. So if we enter that place now with G-Wagon, Escalade, Ferrari, Lamborghini. They will buy whatever we are selling to them. That's how people are. So, that being said, the second group of people, why is it Instagram or TikTok? Let it be TikTok, not Instagram. So the second group of people are those who have been struggling with trading for many years. They have not been able to be consistent with profit making. So they make profit today, they lose it tomorrow, they lose more than they win. So that's why it is FOREX clinic. So it's just like a pregnant woman that goes for antenatal care every week or every month? Every week. So that's the clinic. So it's FOREX clinic. So where people come, we diagnose their problem, and then we prescribe drugs for them. All right. So it doesn't matter where we are starting from. Not necessarily from the beginning, but whichever angle we are starting from, along the line, you will understand what we are doing. Along the line. So you just keep showing up, you just keep attending, you just keep coming every Tuesday, and then along the line, you will understand what we are doing. Because sometimes you may come and then it look like we are starting from the middle, and then it seems not to be understanding anything. That's not a problem. That's not the problem. So since it is something that is continuous, definitely we'll be repeating so many things, going over it again and again and again and again. But I am very confident of one thing. If you can consistently attend the clinic for 3 months, and you are serious with what you are doing, you are serious with your life, I'm telling you, you will start trading and you will start making money. I am very confident about it. If you are serious, you are consistent, you avoid any other distraction, you make Forex your obsession. When I mean your obsession, that means you give all yourself to it. You allow any other thing else that causes distraction for you. Friends, unnecessary partying, unnecessary a conversation, network, and co. You starve yourself of those things, and then you begin to feed yourself with these things. With this thing, I can guarantee you, in 3 months, you begin to do something for yourself. That I know. Some of us actually paid for years to get to the level where we can actually understand how the markets operate, and we can always go in and come back home with testimony. Yes, it took us more than 2 years. For 2 years, we were wasting money, we were burning money, we don't understand what is going on there, we're losing, but we didn't give up, we kept on. And for your sake, we went through that stage. But you should not go through that process. You should not. Instead of going through that process, learn from those who have gone through that process, and then from their experience, you start from there. You leverage on their experience. So today, what I want to do, because every clinic, we will do short training session, and then we do a kind of live trading. Every session, every Tuesday when we meet for the clinic, we'll do a training session, and then we'll go live. So today, I just want to show everybody how the market works, and how, when you hear people trade, what exactly are they trading? And those who are actually trading correctly, how are they seeing the market correctly? How are they actually trading correctly? So the market has 2 major movements, but basically it is 3. 2 major movements, market movements. We have the uptrend and the downtrend. So for those who don't have any background knowledge, don't worry. Just from here too is beautiful. Market movement. So we have the first one. We have the uptrend. Uptrend movement. In Forex language, it is referred to as bullish bullish trend. Then the second one is the downtrend. I hope the camera is facing here. Downtrend movement. In Forex language, it is called bearish movement. These are the two major movements in the market. LD movement. The market is either going up or it is going down. The price is either increasing or decreasing. When it is increasing, that is uptrend. When it is decreasing, it is downtrend. Now, the third one is when it is neither increasing nor decreasing. So we call that one sideways movement. Sideways movement. In Forex language, they call it range consolidation, ranging consolidation. Say the market is choppy and so on. So when the market is not going up or going down, then we say it is in a sideways movement. It gets to a particular high, then it starts going down. It gets to a particular range of lows, it starts going up. So basically, these are the three movements in the markets. Uptrend, price is increasing. Downtrend, price is decreasing. Then sideways movement, when price is neither going up nor going down. So now I'm going to clean the board so that I can do further explanation. Let's take it one by one. The uptrend now. Even if you've known these things, learn it again, because that will be the gateway to the unknown. Because if your trade has not been consistent, you have not been able to put enough food on your table with your trading life, you have not been able to pay your bills with your trading life, then something is still wrong with your trading. If you have not been able to do your life, you say you are a trader, but you have not been able to do life with trading, something is wrong with your trading. All right? You go broke once in a while, something is still wrong with your trading, because when you become a trader, you're not supposed to be broke, no matter what, regardless of whatever happens in the markets. And like I said, everybody is supposed to trade. That's my own philosophy and belief. Everybody is supposed to trade. Everybody, either passively or actively. The same way people buy shares of companies, they buy stocks. Trading is doing the same thing by yourself digitally. If you are doing that by yourself, that means you don't need a middleman, an agent to become your broker, where you give the person the money, the person help you buy the shares, and then they help you look for, they give you share certificate. No, you can do all of those things by yourself. You can buy those things. You can buy those things by yourself digitally. All you just need is a broker. You sign up, you verify your account, and then you understand exactly what we are teaching here. You know when to buy, you buy. Then you know when to sell, you take your profits. So everybody's supposed to trade, either actively or passively. Actively, you are trading as a full-time trader. Passively, you are doing it as one of the streams of income. The difference is the one who is doing it actively will take some major decisions, which involve some level of risk. While the one who is trading passively is trading conservatively, because he's just doing it to support whatever he's doing. So that one, there is no risk. And I mentioned an example. I know someone from Ivory Coast. He deposited $1,000 in the beginning of the year. He opened a lot size and held it throughout the year. By the end of the year, he was withdrawing $3,000. So in a year, that account gave him 200%. That's passive trading. He treated it like an investment. it for a long-term purpose, while he continued with his business and other things he was doing. But for active trader like somebody like me now, I am there in the market every day, almost every day, actively there. So I am taking profit, I am taking losses, I am taking profit, I am taking losses. You know, whatever moves in the market, I'm moving with it. So that's active trading. So everybody should be trading, both old and young. Once my children are 10 years old above, they will start trading. All right, because of the freedom that trading gives you. Yeah, it allows you to go on vacation anytime you like. And you can trade anywhere. Anywhere I am, just give me laptop or a phone and Wi-Fi. That's all. Even if it's on water. Anywhere I am, just give me Wi-Fi and a phone. That's how I'll keep making money. Anywhere in the world, provided there is Wi-Fi, internet connection, and you can provide me, if you can't get me a laptop, just give me a phone. So that's how the life of a trader is. He's not hindered by whatever is happening in Nigeria does not affect them. Things are bad, things are worse. In fact, when Naira is bad, that's when they even love it. Some of us, God have mercy on me, some of us are not praying for Naira to fall back. Because when $1 is 1,000, almost 1,005. So when we are changing $100, it's like 150,000. So we like it that way because we are not trading in Naira. So back to the market movement, uptrend. So in an uptrend, the price of the asset that you are trading is increasing, is growing up. That's what it means. So you will see the chart doing something like this. It's just, it keep going up. It keep going up. Price keep going up in this zigzag form. You see it, you see impulsive movement. It goes up very well, then it pulls back. It goes up very high again, it pulls back. It goes up very high again, it pulls back. But one thing is this, the price has increased. The price has increased from $100 to $300. I'm just giving an instance. So you see price move from here to here. That's the uptrend. So what that means is that as a trader, you are looking forward to place a buy around here, and then as the market goes up, you take profits. And then you make money. That's how it is. So also in the downtrend, the downtrend is the opposite of the uptrend. The downtrend is the opposite of the uptrend. In case of the downtrend, which we also call the what? Bearish. I hope you are paying attention to this. So that when you are in the midst of traders, you are not, they say what, they mention bearish. You are saying, that man didn't teach me bearish. So in Forex language, we call it bearish. Bearish means price is decreasing. Price is going down. So let's say the price was somewhere here, it has gone up to this level, then it starts dropping. Let's say price was here, and then suddenly it found itself here. And in a downtrend, as a trader, when you pick sell from here, or they call it in Forex language, they call it short. You short the market. For the bullish, they call it long. You long the market. You long the price. As the price is increasing, you've bought it, you've longed it, then as it's increasing, you are making profit. So in this case, when you short it, when price is decreasing, you are also making money. That's the beauty about Forex trading. In Forex trading, you can make money both ways. You can make money when price is increasing. You can make money when price is decreasing. Unlike those who buy stocks or shares. When they buy shares of, for example, let's say they buy the shares of Dangote at 10 naira per unit, and then suddenly the price collapsed to 2 naira per unit, they will put hands on their head because they will have to wait for the price to go up again. But in Forex, when you know there are three indicators to show you that the price of Dangote sugar is about to collapse. That's one of the reasons why we are doing this. How do I know? Instead of waiting for somebody to tell you what to do, you know yourself by all the parameters of the market. So there are indicators to tell you that the price of Dangote sugar is about to collapse, for example. And then instead of you panicking and waiting, what you do is that you go short against it. So while the price is collapsing, you are making money from the collapse difference. And when you get to a particular point, you just quietly step out. And one thing about the market is that it's there 24 hours, 7 days. For cryptocurrencies, it's 24 hours, 7 days. But for stocks, shares, currencies, commodities like oil, gold, silver that we trade is for 5 days, 24 hours, Monday to Friday. Only cryptocurrencies run for 7 days. So the market is always there. You go in, take your own, you go out. Because a lot of money is being transacted on a daily basis, running into trillions of dollars every day. Every day, trillions of dollars is being traded. So people go in, they make money, and then they step out. Why the markets keep going on? So just like I was discussing with my people this morning, I said they also need to start trading, and they will add it to the job they are already doing. So it doesn't disturb their current job. Only that I'm afraid that sometimes when they start making more money from Forex, they will abandon that one. So I know what to do. But it's my desire that they are also doing it and they are making more money. If they are making more money and they are still faithful and they also want to pay back, they will continue to be with us. You know, some people, when they have money, they gain independence, they want to run away. Yeah, one of the ways to gain independence is by having money. Nobody will be able to talk to you again. One of my boys put on a status yesterday. He said, when you have money, people start paying you special attention. Don't mistake it for love. It's because of what you have. So money is very powerful. After God, it is money. That's why Jesus, I'm sorry, online viewers, if there's any Muslim there, I'm sorry. I'm a pastor, so if you are seeing a flash or a splash of Bible here and there, don't be offended. It's already part of me. Jesus said you cannot serve two masters. I was wondering that he now said you cannot serve God and money. He didn't say you cannot serve God and the devil. Interesting. So money is more powerful than the devil. So have money. Let's move on. So then the third one, which is the sideways movement, is when the price is not going up, it's not going down. So you will see price doing something like this. That's a sideways, no direction. It will just be moving within a zone. Now, for beginners, when you see structure like this, avoid it because you are not yet experienced. Even experienced traders still get trapped here because the markets will just be very volatile during this period. It can decide to remain here. It can decide to remain here. It can decide to remain in the middle. So when you go in, the market will be frustrating you because it won't go up. It won't go down. It will just be. So only experienced traders find themselves in this zone and are still able to make money. In fact, most traders, that's why this Forex clinic is on. One of your problems, if you're already making profit, if you're a trader, you have been making profit, but you usually lose money. I can tell you 90% of where you lose money is here. Yeah. If you are listening to me and you want to find solution to why you have been losing money, 90% of where you are losing money, this is where it is. When the market is ranging, this is where money goes. But when the market is trending, you make money. So for beginners, you need to just avoid these things. So now, the next thing we'll end today's clinic with is, how do I now trade? How do I make money? It's very important. How do I trade this trend? How is it that I'm supposed to go in? How do I make money from trading this movement? How do I make money from trading this movement? So come here if you are not yet consistent with making money. You want to find out the solution. This is it. You have been trading and then you are not consistent. This is where your problem is. Regardless of everything you have known, regardless of all the concepts you trade, regardless of all the concepts, everybody is just saying the same thing, but with different terminology. But people mistake it for those terminologies. What will make them money? It's just simple concepts. Simple concepts. Now, this is the idea. When price is in an uptrend, it does something like this. Now, when it is in this direction, let me do it properly so that it can flow like this. It will make more sense. Let me allow it to flow like this. Okay, so this is how you will see the price, the charts, which we are going to show very, very soon. Now, when in a uptrend, we have what we call higher high and higher low. Even if you know these things before, pay attention to it again. We have what we call higher high and higher low. When the price makes this impulsive movement upward, we call it higher high. When it pulls back, we call it higher low. When it goes up again, we call it higher high. When it pulls back, we call it higher low. When it makes that impulsive movement, we call it higher high. When it pulls back, we call it higher low. Higher high, higher low. Higher high, higher low. In an uptrend, this is what you'll be seeing. Higher high, higher low. Higher high, higher low. Higher high, higher low. Now, there are certain rules governing the uptrend that you must pay attention to. There are rules of engagement here. And the rules are, number one, as long as the current high is always higher than the previous high, and the current low is not lower than the previous low, the uptrend is valid. Let me come back again. Now, before these ones are formed, let's just focus on these two. All right? When you see higher high and higher low, the next thing you should see is another higher high higher low. But pay attention to this. The new higher high that is forming must be higher than the previous higher high. Are we following now? Then the higher low that is forming must not be lower than the previous low. The moment that happens, that trend has been violated. It's no longer a valid uptrend. Do you understand that? Let me take that again. When you open the charts and you are seeing higher high, higher low, higher high, higher low. Now, you want a new higher high, higher low to form. But suddenly, the new... Okay, let me first explain the positive side. Now, then, you are waiting for a new higher high to form. And then, as you open the market, you are watching the price and you discover that the new higher high is higher. The new high that is coming is higher than the previous high. What it is telling you is that this uptrend is still valid. So if you are going to enter that trade, you have to look for a buy. Because you buy in an uptrend. Do we understand it to this point? Also, the low that is forming must not be lower than the previous low. The moment the low is lower than the previous low, it has violated that trend. We say that something is happening and we call it a change of structure, a change of character. Do we understand it to this point? If you are not yet clear, I can take it again. We have a very long way to go. So it's better you understand it. Do we get it now? At best, or in the worst case scenario, what you will see is that the low will be equal with the previous low. That's the worst case before it continues. But the moment it breaks the previous low, is no longer valid. As long as the new high is higher than the previous high, the new low is not lower than the previous low, the uptrend is valid. And what are you supposed to do? You look for buying, look for buy. You go long. So when we finish this case, we will now talk about how do you now buy? At what point am I going to buy? Because there are certain, like I said, there are rules of engagement. Now, the second rule is that you don't buy at higher high. You buy at higher low. You don't buy at higher high. You don't buy when the price is expensive. You don't buy when the price is expensive. You don't buy at higher high. Let's say this is $100. This is $150. This is $200. And then price moves from $100 to $150. Don't buy at $150. You come around $120, $110, $130 to buy. Do we understand that trick? This thing is just like economics. So all the knowledge of economics is not wasted, though. I'm telling you the truth. All those things we were taught in economics, you will think, when you come out of school, there is a joke you make out of it. What is the essence of all those dy dx? What is the usefulness? They are useful in some areas. It's because you didn't go that path. You didn't go that route. That's why it looks like they are not useful. You know, the higher you go, the selective you become. In fact, when you want to do your masters, you have to select a particular area. You are not going to do everything under your area of specialization. When you want to go to PhD, among the masters you did, you still narrow down your area of specialization, area of focus. Because at the higher you go, then the more you want to become an authority. And you cannot become an authority in everything. That's how it is. So all those things we were taught then, graph, statistics, they are very useful. It's just the area of use. So going back to where we are. So the second rule is you don't buy at higher high, because in uptrend, you look for buy. You look for buy. There's a rule, general rule in Forex. We say, don't trade against the trend. The trend should be your friend. That means if the trend is upward, you should go upward with it. If the trend is downward, you should go downward with it. Don't go against it. Are we following? So when you are now buying, you don't buy at higher high. You buy at higher low. Higher low. And look at, let's assume price went up here, came down here, you buy here. If price start going up, you make profit. But if you buy here, it start going down, you are not making profits. So the same thing with the opposite trend, which is the downtrend. In downtrend, you will start seeing something like lower high and lower low. Lower high and lower low in downtrend. So look at downtrend. What is the name? What is the Forex name for downtrend? The Forex name for downtrend. Bearish, good. Now in downtrend, you see something like this. In downtrend, you see lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now the rule is just the opposite. Are you following now? The rule is, as long as the current low is lower than the previous low, and the high is not higher than the previous high, the trend is valid. That means this new low that is forming must be lower than this low. Are we getting it now? This low is lower than this low. This high is not higher than this high. The trend is valid. In the worst case, what should happen is it goes very close to the previous to form equal high, not above it. Once it goes above it, it invalidates that trend. It's no longer valid. So in such situation, you don't look for sell. You wait for the market to now form a new structure, balance, and then you roll with the new structure. Because the moment it violates the trend, two things are likely to happen. Pay attention. Once the trend is invalidated, two things are likely to happen: change of direction or a consolidation, a range, sideways movement. The moment it breaks it, it's either change direction and start going up, I continue. If not, let me know. The downtrend is just the opposite. So now let me paint a scenario of violation of the trend. Then don't also forget, in a downtrend, you look for sell. You short, you look for sell, you go short. And you don't sell at where? You don't sell where? No, you don't. If you want to sell at downtrend, where do you sell? Those who already know about trading should not talk. I want to know if they are getting it. If you are going to sell, where are you going to be looking for sell? If you say lower low, let me see your hand up. If you are saying lower high, let me see your hand up. Lower high. Tell me why it is lower high. You buy at lower low. No, let her, she may be correct. Many of you may be wrong. You know, they usually say something. If you follow the crowd, you may actually be wrong. If you stand alone, you may be correct. Let's see whether she's standing alone. Are you following the crowd or you are standing alone? Are you selling at lower low or lower high? You are selling at lower. You have joined the crowd, though. You better stand out. Okay, so why are we selling at lower high? Okay, yes.
So we are selling by once the price now.
Okay.
When you sell at lower, I've lost many of it.
Yeah, that's it. So the idea is saying is that when you sell at lower low, what happened is that you have sold very, very cheap. You have sold too cheap. There is a higher chance that price will come back. All right? Price will move away and come up and leave you behind. And when price does that, when it happens, you will be in loss. So that is why the ideal place to sell, to short when the price is in a downtrend, is at lower high. So now let's proceed. Let me now show you what happens when the movement is being violated. And why you should not pick a trade when you see a violation. So now you see something like this. Now we have higher high, higher high, but watch what happened here. The new low has now dropped lower than the previous low. Do we get it now? The new low has dropped lower than the previous low. What is likely going to happen is that the new high will not also be higher than the previous high. You know, remember the rule is when it is like this, it will go higher, then the low will not be lower. But the moment anything happens like this, what will happen is the new high will not get up to this level as well. So two things will likely happen. Either price begin to do something like this. You see, direction has changed. Or it start doing something like this. It start doing something like this. This is what we call sideways movement, consolidation or range. Here there is no structure, so you should avoid it. We have to wait until there's a clear breakout where price either breaks higher or breaks lower. If it breaks lower, you start looking for sell, short. If it breaks higher, you start looking for long. The same thing in the other parts. There are many people who have been trading for some time now. This is where they actually have problem. They are so engrossed with indicators so much. Indicators are good and they are very bad as well. And that's why we are not going to be teaching so much about indicators at FOREX Clinic. Most indicators are lagging indicator. That means they are always telling you what has already happened. After there is a major move, that's when they will start telling you that this is what has happened. And most traders trade using indicator. It has happened before they come in. So what they are coming to do is to come and pick the crumbs. And sometimes it fails. Most times it fails. Most times it fails. But if you are trading structure, you are actually understanding, you are seeing what is happening and you are responding based on what is happening right now. Right at the moment. Once you see that structure being violated, you know that something is about to happen, a pause or a change of direction. That's what it means. So it's not all the time you will be in the market. There are times you have to wait on the sideline. And there are times you have to be there. The more you go backward, the more you sleep. So let's proceed. In the downtrend too, when you start seeing the drop, then you start seeing something like this. Remember the rule. The current lower high must not be higher than the previous lower high. So when you see something like this where it is higher than the previous high, the probability that it's not going to go lower is very high, 90%. 90%. 90%, even 95%. That is going to come again. Except there is irrational movement in the market. They call it inducement. This one is just lack of liquidity in the market. When the price, the assets we are trading moves without structure, it is a no move. Something just happened in the market that caused it. The ideal and LD movement of market is a zigzag movement. This is the ideal LD way price should move. That's the ideal way price should move. So anytime price moves on like this, and you just see a sudden sharp shoot up, or a sudden sharp shoot low. Let's say you see something like this. It came down this way. This is a no structure. There is a higher probability that it will start coming back again. Because what happened here is inducement. The investors just reacted based on one information in the, not in the market, in the economy. For example, what we saw on Thursday and Friday was because Trump was going to change the Fed chairman. This has been the Fed chairman for some years now. Yes. So he announced on Wednesday that he was going to change this guy. And this guy has always been hawk. You will understand it later. I'm not going to bog your mind with this now. Why the new guy that is coming is Dove. So immediately he announced that this guy was coming. He was going to announce this guy. Investors just started reacting. So what many people were doing was to take profits, to stop, to pause their investment. And because of that, there was this massive inducement for 2 days. Thursday and Friday, the market just collapsed. Gold collapsed. Silver collapsed. All the oil collapsed. All the currencies trading against dollar collapsed. All the stocks collapsed. Because there are 3 things that controls the market. Fear, greed, hope. The market is not a manipulation of anything. It's just a reflection of human behavior. The markets that we are trading is just a reflection of human behavior. When there is greed in the market, price keep increasing. Price keep increasing because people are buying. And they are buying high. They are buying high. They are buying high. And the more they keep buying, the more price keep pushing up. Once there is any trigger, when there is a rumor and it triggers fear, they rush out of the market and market collapse. Boom. So anytime you see a collapse in the market, it's a response to fear. Are we following now? So this market we are talking about, many people have so many misconceptions about it. Oh, some people are controlling it. Oh, it's a scam. Oh, it's not real. It is real. As people are doing business right now, it's affecting the market. Right now. The way people respond to inflation, you will see it reflected in the market. When there is inflation, the cost of goods increases, right? When the cost of goods has increased, banks will not want to borrow people money. So what they do is that they increase interest rates. Because when inflation is high, interest rate is reduced. So they increase interest rates. When they increase interest rates, people will not be able to borrow money. Inflation will start going down. Producers and manufacturers too, when they see that supply has become higher than demand, they start dropping price. When they start dropping price, bank too starts dropping interest rates. People go to the bank They borrow money to buy because things have now become cheap. When manufacturer sees that demand has increased more than supply, they had money. That's the cycle. And these things always reflect in the markets. That's why in one of our classes, we talk about demand and supply. It's there. You buy at demand zone. You sell at supply zone. Are we following? So that is how the market is. Next week, we are now going to talk about how to now trade accurately on those trends, where to pick your entries from. That is where time frame will come in. You know, when you go to a normal academy, they have what they call it now. They have a module. They will teach you basics of Forex, and under basics of Forex, they talk about market session. They will talk about time frame. They just explain those things. They won't tell you how it applies. Oh, you will see time frame. These are the time frame that they brush over it. They want to quickly take you to the charts, teach you about charts, and then take your money, give you certificate, and you go home. But whenever we are teaching any concept, we will teach how it is applicable to the real life execution. So next week, we'll be looking at time frame. Why time frame is important and how to use it. Because when you are trading this structure, you will need time frame. There's what we call anchor time frame. That is where you are getting the bigger picture of the trend. And then there's what we call microstructure, which is the lower time frame, where you go and pick your entry from. So on the anchor time frame, which is the higher time frame, there is something you are looking for. When you now switch to the micro, there is something you are looking for, because that is where your entry will be. Then you will avoid early entry, late entry, and then you are able to put your stop in a very precise place. Many traders don't trade without stop loss because they don't even know where to put it. They don't know where to put it. They are always afraid. If I put my stop loss here, the market can come and take it and bounce and reverse. Yeah, it happens to many traders. Where they put their stop loss, price will come there, take out their stop loss and go back to their entry. And they will think that the broker is after them. Nobody is after you. It's you that is after yourself. Nobody is after you. The market is there. When you follow structure, the day stop loss, the day the price hits your stop loss, two things has happened. It is either the market, the way you will be taught, it is either the market is changing direction or it wants to consolidate. If not, ideally, with what you'll be learning, wherever you put your stop loss, price won't get there. Price won't get there. But when price hits your stop, just know that it is changing direction or is ranging. At worst, liquidity sweep just cuts you, which will not always happen often. It's on a very rare case. So now let's move to live charts. Next week, we'll continue again. We go theory, then we go practical. So today, I want to show us how it look like, what we have been teaching, how it look like on the live charts. So regardless of the assets that we are looking at, whatever you are learning now applies to all the assets. Yeah, thank you. So now look at, let me remove all this. You can blindfold the moving average but remove all the drawings. Yes. Blindfold the moving average. Let us just see naked charts. Put it on 1 hour. Now, this is how the chart is. All the assets you can think about, they have their charts. Netflix, Google, Nvidia, Meta, Apple, Tesla, which one of them? Any stock you can think of. I've never looked for Dangote, but it could be there. As long as it is tradable, people can buy the shares, you will see the asset there. So the assets we trade commodities. There are different assets that is being traded. We trade commodities. Under commodities, we have gold, silver, oil, bitumen, diamond, mango. People trade mango. People trade rice. It's there. Maybe they think I'm joking. Show them cashew. Show them rice. Yes, people trade it. This is rice. Show them cashew. Cashew. Soya beans is there. Show soya beans. Soya beans. Look at it. Soya beans is there. So we trade this, those are commodities. Then we also trade currencies like dollar, pounds, Japanese yen, Switzerland franc, Australian dollar, New Zealand dollar, which one again? Euro. So you will see trading dollar against Japanese yen, pounds against dollar, euro against dollar, euro against Japanese yen. Look at it. Look at them here. That's euro JPY. That's euro against Japanese yen. Euro USD. Euro against dollar. CAD JPY. Canadian dollar against Japanese yen. And they all have charts to show you the price movement. The price against each other. People also trade stocks like Apple, Tesla, Google, Meta, Facebook, and co. Facebook, Instagram, and co. The people trade them. Netflix that we are watching, while you are watching, some are making money from your watch. As you are subscribing to Netflix, people are making money from it. Show them Netflix. So you have to choose who you become, a consumer or a maker. See Netflix. People trade Netflix. Why some of us are watching? Some people are making money. Google, why you are using Google? You think it's free. It's not free. That Google search engine, it's not free. There are many ways it's being monetized, but you don't know. Google is beyond what is the meaning of cucumber. Yeah. In fact, Google is paying people. People are paying Google. There's what they call Google AdSense. If you are earning online, let's say you are earning from YouTube, you are earning from all those ads, they pay you through Google AdSense on a monthly basis. But people don't know those things. So those are the assets. Then cryptocurrencies. People trade Bitcoin, Ethereum, Litecoin, Dogecoin, and so on. SRP, and many more. Then we have indices. People trade NASDAQ, US 30, DAX. That's German stocks. Show them DAX. German stocks. So people trade all kinds of things. They are there. The charts are there. German 3. Some people, why is it doing this? Okay. So now I will only have this is DAX. German stock. NASDAQ, S&P 500. That NASDAQ is 100 tech companies, blue chip companies coming together, their average price. Companies like Apple, Tesla, Nvidia, 100 of them like that. So the average price is being traded. Then S&P 500. These are also small blue chips companies in America. People trade their price. Let me see S&P 500. Let them see. So you will hear some adults mentioning buying of S&P 500. S&P 500. This is what they are talking about. S&P 500, the way it is traded, they just look for buy. When the price, they will wait for price to collapse. So when it collapses, they know it is time to start buying. So this is S&P 500. If you go to a more, maybe daily time frame now, you will see how the chart look like. Yeah, you see the way it's increasing. Just like when you buy GTB Bank shares at a very low price per unit, and then over the years, it keep increasing. If you look at this S&P 500, the reason why many those who are good with trading and investing, the reason why they buy it because it moves faster. This is August, what year? August 2025. And it has moved from this level from 6,200 to 6,900. That's a lot of money. That's a lot of difference. A lot within 1 year. So veteran investors will be waiting for the price to go low. Then they come in again. That's why I said trading is for everybody, depending on how you want to go into it. Either actively or passively. Either way, if it is passively, you learn it correctly, you will make more money. If it is actively, if it is passively, that one is even very conservative. You make money, but it will take time. So let's go to gold. That's my favorite. That's why it's what I'll be using to teach. But anything you learn here is applicable everywhere. Applicable everywhere. You said? You said? So everything you learn here is applicable everywhere. You can use it everywhere. Okay. It will be, there should be. For example, not all the things that is traded, that you will have them here. The reason is because some of them, the way their growth is, when you bring it here, it will look scattered. Show me Nigeria, Naira versus dollar. You see how all these charts are. See how smooth they are. Let's see Naira versus dollar. No, you got one correctly, or you now change it. The Naira, this Naira hero. Let's look for Naira dollar. I mean, no day there. It's supposed to now, Sam. You've passed it now. Aha. Go to 1 hour. You see how it look like? Can you see anything? People buy the shares too. Barclay. Yeah, Barclay is being traded. Exactly. Just like NASDAQ. You know, NASDAQ is combining 100 blue chip tech companies together. So that's how those ones to her. They are under Barclay. You understand? So anything that happens to one can affect all. So now, and then also there are some companies that they cannot measure, they can't bring them on technical something, because if you want to trade Naira and now it's deactivated, it's not active, it's not active. If you want to trade Naira and dollar, just go to Aboki or go, or go to or go to the bank. But those online, we don't understand what Aboki is. Aboki is the people that do exchange, build the exchange for us. So it's from there we do buying and selling. But people actually trade Naira and dollar. Yes, people trade it. So what they do is that they wait for the price to appreciate. Then they go. So the same way we are doing it here, they are now doing it physically and so on. Yeah, because the what is there is that you are making profit from the difference. What the price is today versus what the price is going to be tomorrow. So if you can go in, the difference between today and tomorrow is where you make money from. Do we get it? Okay, so let's go back to gold, ma. Our precious gold, okay. So our precious gold. Let me increase the charts so everybody can see. You remember what we taught? Move it this way so that we can look at. I want to show them the trend. Aha. So if you remember what we were looking at, uptrend, higher high, higher low, higher high, higher low, higher high. And you see how it was just following the trend. Higher high, higher low, higher high, higher low. It kept going higher high, higher low, equal high. But the low is not lower. Can you see? So that makes it valid. It still went up. Higher high, low. So you see higher high. Now look at the low here. See what happened? The higher high came and broke the lower low. Then the new high didn't get to the previous high. What happened next? It started collapsing. It changed direction. That's exactly what I was teaching. I was showing us here on the charts. Immediately, it started dropping. The moment that structure is violated, there's going to be a change of direction. Which asset can we look at that is currently trending downward? I've not seen any recent. I've not looked at many of those assets in recent time. Let's see which of the, okay, USD card. Okay. Can we see now? Can we see? Lower high, lower low, lower high, lower low. Then somewhere here it did equal low. You remember I told you, at worst it will do equal. And then it kept on going. Lower low, lower low, lower high, lower low. Do you know that there are people who will just stay with this and just be making money from it? The moment it goes to lower high, they enter. Then it goes lower, they take profits. They wait for it again to do lower high. At lower high, they enter. At lower low, they take the profit. On and on and on and on like that until it starts. So you don't just say, if I'm trading oil, I have to be buying. No. You have to follow the trend. The trend has to be your friend. You trade along with the trend. If the trend is uptrend, you look for buy at higher low. If the trend is downward, you look for sell at lower high. Do we understand it? Let's go back to gold. Let's see whether we can see something we can trade. We have less than 15 to 30 minutes to be done. So now, how do people enter trade? If I'm going to buy at higher low, or I want to sell at lower high, how do I know that it has gotten? How do I know that it has gotten to a place where I can now enter? Let's say it's an uptrend. How do I know it has gotten to a fair place enough for lower, higher low for me to enter? That's what we want to end with now. And we'll see if it's possible for us to pick a trade now. A live trade, though, if I see, I will pick the trade. Everybody will see if it is possible. If not, we'll wait till we are able to see. We'll wait until we are able to see. So let's allow our charts to come up so that we can look at the trade. Any question? For those online, if you have any question, you can put it on the chat box. So you can ask your question if you're online, put it on the chat box. And also, I think for this FOREX clinic, we need to create a community where those who are joining us can always be there, and then they will get to have information, more information about trading. So, Gospel, please, can you help send a link of? We have a Telegram group already, existing one. So send a link on the chat box. Let them join, and everyone here too should have that link so that everyone can join. We can begin to get information and so on. Because later on, once the community is big enough, we'll start also putting signals there for people to trade, but particularly for those who will not be able to analyze the market, but they already have the understanding. So we send a signal there, then they analyze it by themselves. When they see that it aligns with the analysis, then they can pick it and trade it. So can we go back to the charts? Let's go to the chart. Now, gold has been doing higher high, higher low, higher high, higher low for many days. It was in a uptrend. Then later, he violated that structure. The new high didn't remove the previous high. The new low took out the previous low. And then it started going down. It started going down. Then when it got here, it did lower high. The new lower low didn't take out. Your Gospel, please, can you let them see this place? The new low didn't come to take out this low. And right now is already forming what look like an uptrend, which is a new high that took out the previous high. The low didn't go below this low. A new high has taken out the previous high. The low is supposed to come somewhere here, but it's hanging around here and it's consolidating there. It's ranging there. So from what we have learned here, somebody tell me what is likely going to happen. From what I have explained here, what are we supposed to do? Who is going to help bail us out? What are we supposed to do now? Based on what I have explained earlier. If it's ranging, we have to wait until it changes direction. Correct, perfect, that's it. If you don't wait, the trade will be taking you out. This morning, I picked a buy and I made $159. Out of that $159, I have given back $90. Do you know why? Because it's ranging and I refuse to wait. It kept on going to my stop loss and returning back to my entry. The reason why I did that was because I wanted to catch the bull by the horn. I already make profits. So if you have not made profit or you are still learning, don't do that. Once you see a range, stop and wait. So early in the morning, I took the buy from here and I took it here. I actually came out here at this previous high. I took my profits here. So when it broke this high, I came in. But it has been ranging. So right now, even myself, the remaining $60, I won't keep them. So that my family can have good dinner. So I'm also waiting. You are following. In fact, and I sincerely love that. The fact that you are following, because you can't predict what can happen from here. It can decide to break lower and take out this one. And the moment it take out this guy, what is the next place? Downtrend. The moment it take out this guy here, is going down. Are we following now? Then it can decide to break higher. The moment it breaks this high here, that was one of the things we are going to tackle next week. The moment it breaks this guy here, because this is an area of rejection. The moment it take out this guy here, it goes higher, they will start looking for our buying continuation and we'll continue to make money higher. So let's close with this. So right now, if you can see a breakout before we end by 1, we'll trade, live trading. If not, we'll wait. And once I pick the trade, I'll share it on the group and show everyone. The next week, we'll tackle it. So now, when you want to do your analysis, there are 2 things. I will keep repeating this in all classes for everyone. How to pick your trade. There's what we call anchor time frame. Anchor time frame. Anchor time frame is the time frame where you go to do your analysis from, where you went to check the proper trend. And the time frame you are going to begin with will be determined by the kind of trader you want to be. Let's pay attention to this. The type of trader you want to become will determine the time frame you will use as your anchor time frame. There are 4 types of traders. That's why I said I'm not going to start by saying introduction to Forex. No. As we go on doing everything, every Tuesday, we'll be going to the beginning, we'll apply it. We'll go to the beginning. Next week now, I will teach you 1 or 2 indicators. We'll talk about rejection, resistance, and support. Then, while we are discussing, we visit introduction. We'll be picking a concept. There are 4 types of traders. We have scalpers. we have day traders, we have swing traders, and we have position traders. Those are the 4 types of traders: scalpers, day traders, swing traders, and position traders. Who are the scalpers? Scalpers are people who they go in and out of the market. They are taking advantage of small movement in the market. Small movements, small price movements. So they go in, they take their $2, they come out. They go in, they take their $5, they come out. So they are always going in and out, in and out. They take advantage of small price movements in the market. Day traders are those who trade within the day. They allow their trade, they are looking for a trade that can run for a few hours, 3, 4, 5 hours within the day. And once they are done for that day. Once they are done, maybe they just trade once or twice in a day. They pick first trade at London session. When that trade is done, they look for another trade during New York session. There are 3 major market sessions: Asian session, London session, and New York session. We'll talk about this later in our class. Don't let us dwell on that. So let's focus. Then the top traders, swing traders. These are traders who look for trading opportunity for few days, 2, 3, 4, or more days. So they want to catch a bigger move in the market. So these people can hold one trade for days. Then the position traders are those who trade into months, into the years. They are the big investors. Those ones don't even go near smaller time frame. There's nothing they are doing there. The position traders, because they are not looking at what is happening today. They are looking at what can happen. They are doing a larger overview of the market. They are looking at what can happen to oil in the next 4 months, 5 months, and then they trade based on that analysis. They do more of projection with fundamental analysis, using news, geopolitical events, economic data to determine how they trade. What is Trump likely going to do about the tariff? Is he going to relax? Is he going to make friends with Iran? And when we are talking about Iran, it's already affecting oil and gold. You see, they are making decisions based on those events. If anything happens to countries like Sudan, Qatar, UAE, China, India, Ghana, it affects gold. If there is war, it affects gold. Why? Because people consider gold as safe haven, where they can go and put their money that nothing will happen to it. Because Apple can liquidate when there is war. Microsoft can liquidate. Uber can fold up. If there is war and there is no flight movement, Boeing will go out of market. Investors will not have money again. So investors will go and remove their money and go and put it in an asset that is secured, like gold, like silver. Those are the things these position traders, they look into. So you are not a position trader. If you are an individual trader, don't bother yourself about position trading. So you can either be a swing trader, a day trader, or a scalping trader, a scalper. What kind of a trader I am? I am a scalper and a day trader. I don't do swing trade. I don't like trade to pass 2 days. There's nothing I'm doing. How can I place one trade and I will be waiting for 2-3 days? No, I don't have such patience. And somebody like Gospel does that. Maybe before, I don't know if he's still doing that. He holds trade for 2 days use trade more. I don't do that. Because something now. Once, if I'm not correct, I know I'm not correct now. If I place a trade and it's not right, let it judge me now. And if I'm correct, let the reward be paid me now. I like that. Yeah, I like that. I prefer that. However, whichever trader you want to become, you must have your anchor time frame. And your anchor time frame must be a higher time frame. So if you are a scalper and a day trader, your anchor time frame should be either 4 hours or 1 hour. 4 hours. H4, 4H, or 1H. So if you look here now, you will see different time frame. You see 1M stand for 1 minute. Forget about this 5S, this 5 seconds. I don't know some beasts that trade this one, but there are beasts that trade this one. There's one guy that trade 1 second. I don't know the way his mind is working. This 1 minute, as small as it is, I don't go near it because I don't know how to use it. But some people are very good with it. Very, very good. They are very sure of their trade here. So when I was watching an interview of one guy, he said he trades on 1 second. 1 second. He must be a beast. So we have 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, day, 1 week, 1 month. So all these things we are saying now, we will explain it in another clinic, not today. So if you are going to be a day trader or a scalping trader, you need to have an anchor time frame. And it has to be between 4 hours and 1 hour. And what are you doing there? You are looking at the trend, the prevailing trend of what is happening. Because 1 hour and 4 hours gives you a truthful structure. It tells you the truth about that market. The higher the time frame, the clearer the market structure is. The honest it is. Lower time frame will make a lot of noise. There are a lot of noise there, so it doesn't give you the truth, the clear picture. So you either start from 4 hours or 1 hour. If you are going to be scalping, maybe 1 hour is good as your anchor time frame. And what are you doing there? Let me show the chart very well. Let's say on 1 hour. So what are you doing on 1 hour? You are looking at the trend. What is happening right now in the market? What can I see happening right now in the market? Okay, I have just seen a downtrend. And then right now begin to see a build-up of higher high, higher low, higher high, higher low. On recently, so what am I supposed to do right now? Because of that collapse that happened, and the only visible, I don't think we should go into that today so that I don't confuse everybody. I'm going to start talking about marking key zones. Yeah, that might be very, I might be taking too much from you. So now let's say the market is moving higher high, higher low, higher high, higher low. What I'm looking for is to buy. I'm going to buy to a particular level. I won't just be buying. I want to buy to a particular level. Key areas, which I will focus more next week. So now I'm not going to pick the buy on 1 hour. I will now go to what they call microstructure. And the microstructure is in the small time frame. So what I will do is that having look at what is happening on the higher time frame, I can see higher high, higher low, higher high, higher low. I will now go to a lower time frame, like the 15 minutes or 5 minutes. I prefer the 5 minutes. I'm already used to it. So I will go to 5 minutes. When I now go to 5 minutes, I'm also looking for the same thing in 5 minutes. I'm looking for the same thing. You know, remember, when we are in a uptrend, we are buying at higher low. I will go and look for higher high, higher low in the small time frame. I'll now go and place my trade on. Now let's look at the chart. Because the lower time frame will give you some little structure that helps you to define where to enter. Remember, on the 1 hour time frame, we saw some candlestick on a straight level. Look at them here. Yes, it's broken down into pieces. Look at them here. Look at them there. Those are those time frame. Go to 1 hour, let them see it again. Drag it here. Let's look at them here. Go back to 5 minutes. Now, 5 minutes is telling us right now that you just have to wait for two things to happen. Either it breaks this level or it breaks this level. If it breaks this level, it will start doing lower low. It will start doing lower low, lower high, lower low, lower high. But do you know it's already counter trade? Because the higher time frame is telling you higher high, higher low. Lower time frame is telling you lower low, lower high. And since you already have a bias that you want to buy, and it's doing lower low, lower high, you can't pick a buy. What will happen is it will do that lower low, lower high to a level, to a zone where it will now shift the structure. The moment it shifts structure to higher low, higher low, higher high, higher low, higher high, that's where you find your buy. It seems they brought light. That's what they are trying to tell you. Anytime we're having this training, we should just permanently be on generator for online guests, so that there won't be disruption. You said? Yeah, I know they can hear me, but they won't see. Okay, but we didn't know that something happened. Okay. If that's the case, then except they'll be sending us money for the. But they won't see the chat. They will still be seeing the chat. Oh, really? Okay, awesome. All right, let's go back to the chat. Really, this is what they are saying. So let's continue. Now, on the microstructure, before you pick a trade, it must be doing the same thing. It must be doing the same thing that your anchor time frame is doing. Please note what I've just said now. Your microstructure must be doing the same thing that your anchor time frame is doing. The microstructure must be doing the same thing. Must be doing the same thing that your anchor time frame is doing. If they are not doing the same thing, if your anchor time frame is saying uptrend, and currently your microstructure is doing downtrend. It's not the same. Do you understand that explanation? Let's look at the board. We are closing now. We have less than 5 minutes, and then we end it here. Have you shared the link on the group, on the chat box? So if you're online, kindly join the group, because there are some other things that will be coming in between the week that will benefit you. And also share the link to anyone you know who is struggling with consistency. So this is your anchor time frame. There's nothing new about this term anchor. It just means the main place. So it's not a new technique. All right? So don't bother yourself that somebody has come with a new thing. I didn't come with something new. Yes. The truth of the matter is that those who are trading just know what they are doing, regardless of what they are doing. They could be trading IC, TSMC, traditional method, whatever it is. Those who are profitable just know what they are doing. Now, the reason why I didn't call this one micro time frame is because we are concerned about the structure here. That is what will determine your entry. So now, in the anchor time frame, let's say 1 hour, because you want to scalp or you want to do day trading, we see something like this. Either it is at this level, higher high, where you are not permitted to buy. Remember, it's at this level, higher high, where you are not permitted to buy, or it is at this level where you are now looking forward to know when to enter. So as it's dropping like this, you want to know when to enter. There is alarm that I need to do something. So now, how do you now enter? That's when you come to microstructure. Now, let's use the first scenario. If it is at this level, it's at higher high. On microstructure, you still be seeing something like this. All right? You'll be seeing the same thing. Higher high, higher low. Higher high, higher low. Now, when it start retracing, and it gets to higher low, the next thing that will happen is that this one too is already forming this. Are we following? On the higher time frame, it's already doing this. Now, the first person that we pick will be this guy, the lower time frame, because it responds faster. This guy will now be the first person to start doing this. This is where you will enter. The moment it breaks this high. The moment it breaks this higher high and it closes here, you pick your buy. At this level, it is still somewhere here. Somewhere here. Do you understand? Does it make sense? It's not making sense to some people. Exactly, that's the point. When it is here at this higher high and it's going down, the moment this one too will be doing the same thing, the moment it's reversing, it will tell you that I'm about to move higher. You know, the rule is the current high must be higher than the previous high. The moment the candlestick, the price breaks the previous high on the microstructure, that's where you place your buy. Do you know where you place your stop loss? Just below the lower low. Just below the lower low. Now, on the higher time frame, anchor time frame, it will still not get to higher high yet. It will just be moving. Meanwhile, you have entered. So by the time it will be breaking this higher high, you have already made some profits. Do we understand? Do we understand? So that's how you pick your trade. You execute from the microstructure. You put your stop loss below the low, not candlestick. People put stop loss below candlestick, not candlestick. It must be below the low, because if at the end of the day, if it breaks this high and then it starts reversing, so let us know that it has violated that structure, is for it to break this low. Does it make sense now? Remember, the rule is the current low must not be lower than the previous low. So if it's going to break that low, that means it's changing structure, it's pausing, then it take you out. I'm telling you, 7 out of 10 of this will work. 7 out of 10 will work. On Friday, I turned $300 to 1,002. Just on this. That was what informed. If you see on my status, I've been putting there 100 or nothing, 100% or nothing. That's what I was saying. Because I just realized that the market is just brutal, and you too, you have to be brutal. Hold the bull by the horn. Don't allow it. Don't say, let me just be trading. When I do too, I'm okay. I'm not okay. Oh. This year, I want to make $1 million. This year. No, there are already younger guys, or younger than me, who are already doing this. Yeah. People like your age mate too. I'm telling you. And they are not faking it. They are doing it for real. And if it's working, this is what they are doing. They may have another name for it. But if you go and check their chart history, you will see that this is what is happening. So this year, we will hold the bull by the horn, including the bear. Does the bear have horn? Does he have horn? No, it doesn't have. We hold the bear. So this is how you trade structurally. Yes, sir.
Question of that
Microstructure, yes, sir. Yes. Please. What happened here? Mark here. Let me highlight here on 1 hour. Okay, sorry. Go to 1 hour. We are done. So we'll continue from here next week. Okay, now highlight here. Then let's go to lower time frame and see it. This is even trading without indicator. But in one of our classes, I'll now show you how to support this setup with indicator, like moving average or volume weighted average price, VWAP. Highlight that space, and let's go and look at it on lower time frame. Take it to the high, to the current high. The upside. That's it. Now let's go to lower time frame. On the microstructure, let's say 5 minutes. Right click and reset. It will go faster. Can you see now? So remember, I was saying it must be doing the same thing on your anchor time frame and your microstructure. They must be doing the same thing. Now it started here. Higher high, higher low. It started doing the same thing. When it got here on a lower time frame, it started relaxing. So now, what I was saying there is this. Let's say price goes up here. On your higher time frame, it has done the same thing. Then it starts dropping. On the higher time frame too, it will be dropping to form higher low. On the lower time frame, the moment it takes out, let me mark this place. No. Use something else. A line. Use a line. The moment it takes out this previous high, that's where you place your buy. Then you place your stop loss at the low. Put where the stop loss will be. Now imagine, let's say you enter there, all right, and you put your stop loss here, see where you have gotten to as profits. Did you see now? You only came back to your entry and continued. Do we understand that concept? That's it. So many people find it difficult to find their entry. It is either they are waiting too long and then the price didn't, for example, those who use Fibonacci retracement and they are using 50% or 65%. And they are waiting for price to come to 50%. I will show us, one of the classes, I will show us Fibonacci retracement. But sometimes it will not work. Price might not come there. Then it will continue. It might just come back to 35%, 32%, or 20% and continue. So how do you still tackle such? One more thing before we close. I said it last week to those I trained. Don't be afraid to trade. Trading is 50-50. It's either buy or sell. So don't be afraid to pick a trade. Now that you now have knowledge, you are no longer on the 50%. You are now like 60, 70, 75%. So the chances that it will always go your way is more than the chances that it will not go your way. So don't be afraid. A setup comes, take it. And let your risk-reward ratio be higher. Let your reward ratio be higher than your risk. If the first one failed, pick the second one. If the second one works, it's covered up for the first one that failed and even add Jara on it. So it's a win-win thing if you know what you are doing. If you know what you are doing, it's a win-win thing. So that's the end of today's clinic. Any question? And then we meet again next week. So if you're online, join the Telegram group so that you can benefit from other informations that will be coming on before next week. So we'll meet again next week, Tuesday, for another clinic. So if you're already a trader, your eyes is already opening to know why you are not making headway. You need to trade structurally. Even if you are a beginner and this is your first class, something has dropped. So I think we are done. Thank you so much. God bless you. Well done, sir.